Home price appreciation across the country is barely positive compared to last year at this time. Depending on how you measure it, home prices are about 2% higher on average across the country than last year. Late last year, prices were about 4 to 5% above the year prior. Now we're looking at 2%. So the question worth asking now is what happens the rest of this spring? Do home prices turn negative? If mortgage rates stay elevated as they have been, demand will stay weak and supply is slowly growing. So further price pressure is a conceivable scenario. Newly pending home sales this week came in at the same level as a year ago. Sales have been running below last year, so that's a tiny bit of encouraging news as most of the housing data nationally continues to signal that home buyers are sitting on the sidelines. So this week, Thursday, February 20th, is our monthly webinar. In these webinars, we get to spend time on the local markets, and man, the wingnuts are out this week. The internet this week is overflowing with people who have like a single screenshot from Zillow and have declared that the government cuts are suddenly the Washington, D.C. housing market is crashing. Spoiler alert, the Washington, D.C. housing market is not crashing. Inventory is still actually very tight in the D.C. metro. New listings are barely above the pandemic lows. We will spend more time with D.C. and a bunch of the other local markets on Thursday. There are lots of parts of the country where supply is up and prices are down from last year. So which are they? What happens next? So we're going to dive in Thursday. These webinars are limited to 1,000 attendees each month, and we get way more than that who want to join. So you can still reserve your spot now. There's a link in the description below, so click that to join us Thursday. I'm Mike Simonsen. I'm the president of Altos Research here at HousingWire. So let's take a look at the data for how February 2025 is shaping up. So as I mentioned, home price appreciation is waning. Now, on average across the country, home prices finished 2024 up about 4 to 5% over the year prior. In the first quarter of this year, sales momentum has slowed and prices have also. So the median price of the newly pending homes sales this week, those sales that were like on the market, they took offers, they started the sales process this week, is $386,000. That's a little downtick from a week ago and is just 2% higher than last year at this time. I pointed out that in the long term, normal times, most years would see about 5% home price appreciation each year. So 2% right now is obviously weaker than normal. It's not negative, but I find it useful to think about home prices as virtually flat year over year, unchanged from a year ago. In fact, in real terms, home prices are negative from last year. So as I mentioned, in some markets, some weeks are priced above last year. Many markets are priced below last year. Home buyer demand remains weak, and it shows in the sales prices. So it's not really accurate to say home prices are falling. You can see in this view of the weekly pending home sales prices, the purple line is 2025, and it is still above the previous years by a little bit. The question of the day is whether this year's sees downward steps in home prices. So we can use this data set to see when home prices are measurably falling. So in June and again in October of 2022, home prices fell. So I've highlighted that here in the gray for the green line. The green line is 2022. In the second half of 2022, when the market adjustment rapidly happened as mortgage rates spiked. So in the second half of 2022, as we could see that those home prices adjusting quickly. So the market behavior now is different from then. So in the first half of 22, we were emerging from the pandemic home buying frenzy. Mortgage rates were rising very quickly every week, and everybody knew it. So any potential home buyers were fighting to get their deals done in early 22 before rates climbed too high. By June, rates had climbed too high. Buyers stopped, and at that time, the only activity for home buyers happened on properties that they saw as a bargain. Home prices dropped several percent in June 22, and you can see that in the green line here. Then in the fall of 22, interest rates spiked again, and all the way to 7.5%. That move was way higher than anyone had expected. Buyers got spooked again and home prices dropped again. So that's not what's happening now, though. So now is less of a home prices are falling and more of a home prices are staying flat for a long time. Now you might notice that the best properties, well priced, are actually selling quickly in most of the country. So a friend sold this place in DC last week in 2 days with multiple offers. So the scenario now across the country is that the Sunbelt markets have a lot of inventory, and those southern cities are much more likely to have home price declines compared to last year. The northern cities have very tight inventory and are much more likely to have home price appreciation versus last year. All right, let's switch to supply. There are 638,000 single-family homes unsold on the market around the U.S. now. That was a healthy rise of almost 1% for the week. That's normal and expected for February. Inventory actually ticked lower for the last 2 weeks. So a nice increase in the homes for sale this week is good. Nationally, there are 29% more homes unsold on the market now than a year ago. That's 144,000 more single-family homes on the market right now. So inventory has been about 27 to 30% more than the year prior for like 6 months now. If mortgage rates continue to stay elevated around 7% or for longer into the year, I expect inventory to keep growing and expand that difference from 2024. So there are 29% more homes on the market now, but it could grow into the 30s if mortgage rates stay elevated. In general, higher rates create higher inventory. We have a forecast that will end the year about 765,000 single-family homes unsold on the market. That would be an 18% increase in 25 over 2024. So our forecast assumes some tightening with the trends from 2024. However, so far in 2025, interest rates have stayed higher for longer, and therefore inventory is staying higher for longer. If we get lucky and mortgage rates fall, say, closer to 6% before the end of the summer, I expect demand to pick up faster than supply. So inventory would tighten compared to 2024. If rates stay higher for longer, we'll probably have to revise up our inventory forecast for the rest of 2025. The takeaway for inventory numbers this week is the inventory of unsold homes in the market continues to grow across the country. There is no sign of that changing anytime soon. Lots more, by the way, on the inventory trends in the webinar Thursday. On the seller side, there were 57,000 new listings unsold this week. That's a nice 5% jump for the week and is 14% more than a year ago. In addition, there were 11,000 new listing immediate sales. So in total, 68,000 sellers this week, 68,000. That's a healthy 8% more than the same week in 2024. So 8% more sellers. In this chart, we're tracking the new listings unsold each week. So you can see that 57,000 now, the purple line for 2025. Inventory is building a little quicker each week than it has in recent years. There's still a lot fewer sellers nationally than the old normal levels. The gray lines here are the new listings level from the previous years, and blue is last year. So this is like the Washington, D.C. nonsense that was floating around the internet this week. So there are only 57,000 new listings across the country. It's not that much. The DC Metro had about 450 single-family homes newly listed and another 450 condos newly listed in the week. 900 new listings is about 50% fewer than DC used to see in February. So in the years prior to the pandemic, so it's still very few sellers. If you have a hypothesis that there is some flood of sellers that are coming to crash home prices, man, it's just not in the data now. It's not in DC. It's not nationally. It's not even really true in the weakest markets in the country like Tampa. There are just not that many sellers flooding the market. In fact, it's the demand side where we see the implications. It's like not a lot more sellers, just fewer buyers. Nationally, we counted just over 60,000 newly pending home sales for single-family homes this week. That's an increase of nearly 5% for the week. which is what you'd be hoping for the housing market in the middle of February, 5% growth. The weekly sales numbers came in just a tiny fraction ahead of a year ago, and that's only the second time this year. Home sales have been running behind last year's already very low levels. It's hard to see any bullishness in the home sales data. So this chart shows the weekly newly pending sales. The purple line is basically equivalent to last year's pace. Last year was super slow for home sales, of course, so there's no signal in the weekly transaction counts that is at all picking up. The total number of single-family homes in contract is 304,000 now. That's 3% fewer homes in contract in that sales process than last year at this time. So homes spend 30 to 40 days in contract before the sale closes. So when we look at this whole set of homes in contract, these are the sales that will close in February and March. So the first quarter is already visible with even fewer sales in Q1 than in Q1 2024. If the weekly sales numbers were to suddenly pick up, that wouldn't be reflected in the closed sales data until Q2. So like our inventory forecast, if the current trends don't change soon, I expect we will revise down our forecast for home sales in 2025. So that as of the fall, we had been expecting small growth in this year in home sales, like 5%. It's only 6 weeks into 2025, but so far the trends are the wrong way. So keep your eyes open for that. And we can see this demand weakness in the leading indicators too. So there are more homes on the market now with price reductions from the original list price than in any February in many years. More price cuts than last year, more than 2023. As of this week, 33% of the homes on the market have taken a price cut. That's actually a slight fraction fewer than a week ago, which coincides to a pretty good new listing set this week. More fresh new listings means as a percentage, there are fewer homes on the market that take a price cut. The purple line here is the curve for 2025. I've highlighted 24 and 23 too. In 2023, that's the teal line here, you can see the price reductions were improving each week with surprising demand that spring. We do not have that surprise right now. So the current price cuts data is one more factor that leads me to ask the question, could home prices turn negative in 2025? It hasn't happened yet, but that's what we're keeping our eyes open for. So stay tuned. Okay, that's all the data we have time for today. If you need to communicate about this market with your buyers and sellers, you should join us at Altos Research. Go to altosresearch.com. You can now sign up for a free Altos account to get your local data. We'll help you dive into your local market, and you can start helping people understand the market today. So go check that out. There's a link in the description below. All right, more next week.